let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Hello, Mr. Shah. Good morning. Always a pleasure to see you. Now, the markets have jumped quite significantly since October 26, and we have been talking about this, pretty much on a week-on-week basis. But last week, we saw some bit of a choppiness set in, and it seems that the market is finally taking cognizance of the fact that we have in fact run up quite significantly, isn't it?
Thank you, Suyash, and morning to all of you. So, yes, we have been discussing markets for a while now. Last week also we were discussing markets. Our view was there might be intraday correction or maybe 1 or 2 day correction. And that's what exactly happened. Last week we saw a very marginal correction. If you look at percentage, it was 1.5 on the Nifty, 1.60% on the Sensex, close to about a percentage on the Bank Nifty. So it was hardly anything according to me. I think we have get used to or accustomed to choppiness and volatility. And the fact of the matter is that over the last 50 odd days, that is from 2nd of November onwards, we have scaled great heights. We have also seen 21,600 or thereabouts on the Nifty spot, 71,500, 71,600 on the Sensex. Stock specific, some good moves. This week is going to be truncated. Yesterday we had an off on, we'll have the F&O expiry on Thursday, possibly last 4 days of this calendar year of trading left. Maybe a little bit of choppy and volatility, but I think let's give it to the market, Suyash. We have gained a great momentum, especially in the last month or two. And I think a quiet goodbye to the year 2023 from the markets is what I expect at least. No major fireworks. In keeping in mind the F&O expiry, there will be choppiness and volatility on Wednesday and Thursday as we approach the F&O expiry. But as I have been recommending, as I have been advising since we started interaction on this channel, all dips are going to be great opportunity to buying into. Starting Jan 24, second week onwards, we will have a curtain raiser for the third quarter earnings. And our anticipation is that the third quarter earnings should be better in color and shade compared to what we've seen second and first quarter.
Keeping it with the December quarter earnings season, sir, what are your broader expectations, especially in regards to the demand? Because, the demand had been lacking at the bottom of the pyramid from the rural segment. Do you expect a revival in that or some sort of a turnaround over there because of the festive season?
So firstly, I think I always believed in one thing, Suyash, is that India is and will remain a consumption-driven story. With a huge population, you have a sizable amount of population of young population. Point number one. Point number two, large part of this population is associated with agri activities. We had erratic monsoon this year. There is no doubt about it. In some places there was excess, some states there was excess, in some states there was deficit. Some kind of pull back from the bottom of the pyramid consumer base was likely to happen. There was no denying, but it is not as significant as one would have thought it would have been, because numbers speak for itself. And my sense is that compared to the second quarter, third quarter for FMCG sector is going to be a little bit better in terms of volume growth, in terms of input cost coming down. And of course, the rural, semi-urban and rural India, I would like to club both, will start showing signs of improvement in terms of consumption. So that should add to the earnings of FMCG company.
All right. And so hold that thought because we have the listing numbers of the three major companies that have debuted on the bourses. Now, Moti Sons Jewelers has in fact listed at a premium of about 90% at 104 rupees per share versus the issue price of about 55. Muthoot Microfinance Suraj Estate, on the other hand, have listed at a discount of about 5% or so. Suraj Estate has listed at a discount of 4.44% at 344 per share versus the issue price of 360 rupees. Muthoot Microfin, on the other hand, has listed at 278 per share versus the issue price of 291. Now, sir, I mean, specifically, I want to talk to you about this jewelry stock and the kind of rally that we have seen. In fact, Senco made a stellar debut. It listed at a premium of about 36%. Vaibhav Gems and Jewelers, although it had a muted listing, the stock has rallied about 60% since then. And now today with, Moti Sons Jewelers. What's your take on this jewelry segment? Is that a theme that one can explore?
So, as a brokerage house, Suyash, when it comes to portfolio building, we always advise our clients to have a diversified portfolio. And possibly depending upon your age and your expectation of return and your risk appetite. For example, if you have, say, 100% to invest, maybe a large part of should go to equity related, whether mutual fund or direct, depends upon your capability and capacity. Some should go towards life insurance, FDs, PPF, land if you have a large corpus. And along with that, at least 15 to 20% towards gold related asset classes. That can be in form of physical gold, that can be in form of gold ETFs or gold sovereign bonds. Our bias in this particular sector, gems and jewelry, if you will, is tilted towards one and only company which is the strongest in this sector, and that is Titan Company. This company has got gems and jewelry. Large part of contribution comes from the wrist watch segment. It has got eye care. It has got other accessory business which is doing well. It acquired Carrot Lane some time back, which has added value to the entire product profile going forward from here on. And I would say that if you want to go into gems and jewelry, stick with the best in the sector, and that is Titan Company.
All right, stick with the best, that is Titan. Now, sir, another big debut, Muthoot Microfin. Now, you had advised subscribing to that issue on the show. That has listed at a discount of about 5% or so. So, opportunity there for investors?
Yeah, so I am not a great person to ask in terms of listing gains, Suyash. Yeah, but on the fundamental side, our company Geojit Financial Services had come out with a subscribed from a long-term point of view on Muthoot. And since it has got listed at a discount, I think those who don't have any time limitation and is willing to commit long-term investment, I think it will be a great investment.
All right, now, sir, we are in the final week of 2023. It has been a good year for equities so far. And I mean, anything in particular that you are concerned about stepping into 2024?
Yeah, the big event is in form of general elections, Suyash.
Right.
But the recently concluded state election and the outcome of that is something to go by. Then possibly some part of that question mark is answered. Let's wait and watch what happens as and when we approach the general election. Other than that, I think budget is going to be on account. It's going to be a formality given the code of conduct that will come into effect. So I don't think we can expect much from the finance minister, Srimati Nirmala Sitharamanji. Earnings is something that we'll be watching out for. The unknown factor that we don't know of and that we will react as and when it unfolds are two things, Suyash. One is geopolitical uncertainty, and the second one is any kind of natural disaster or calamity. I think these are the two unknown factors which we don't have an answer to, and we'll react as and when we have such events unfold. Let's pray to God that it doesn't. But in today's world, to take anything for granted is a little bit difficult. But when it comes to growth story as far as India is concerned in terms of stock market and GDP and
Hmm.
governance. I think all boxes are ticked.
All right, sir. And COVID cases are once again on the rise. Is that a threat that we need to watch out for?
I think we have to be a little bit cautious in terms of using any kind of terminology with respect to the VH.1, if I'm not mistaken, is the new variant. Government health ministry advisors have not raised any kind of serious concern or an alarm, and let's hope that this too passes by without creating any kind of collateral damage.
Hmm.
uh, but one needs to be careful. I would not say worried or I panic. I don't think I would use those kind of words or terminologies. I think being careful is always advisable.
Now, sir, we have been talking about, the IT sector, and you, for one, have been quite bullish on it. But, earlier this morning, we heard a news of Infosys that lost a $1.5 billion contract. And as a result, we have seen, quite a bit of correction set in for these IT stocks. Now, this termination of contract, do you think it's a one-off thing, company specific, or is that a trend that we need to be cautious about?
So in life, there is no win-win situation, Suyash. You win some, you lose some, right?
Right, sir.
So, I mean, I would not read too much into it as a disclosure. And like you rightly mentioned, as a brokerage house, we at Geojit Financial Services Limited have been positive on IT, even when the going was very tough, not only in the beginning of this financial year, but even last financial year, if you go to see, a lot of apprehensions were there. We remained optimistic then, we remain optimistic now. We will remain optimistic going forward from here on, and I don't think there's going to be any serious damage as far as these uh, pull back of deal is concerned.
Hmm.
Knee-jerk reaction is always there in the stock market, Suyash, but notwithstanding the short to medium term volatility or ups and downs, I think long term it still remains an investment idea.
All right, sir. And probably since we are seeing you the last time in 2023, any top 5, top 3, top 4 recommendation, stock recommendation for our viewers, sir, for 2024?
Also, first of all, let me wish you, your entire team, your viewers a very happy, prosperous uh, New Year 2024.
Same to you, sir.
Season's greetings to all of you all. Top three sectors. Uh, well, I'll mention top three here. Okay, so defense, power generation, power sector includes three.
Hmm.
So along with defense, you have power, power generation, transmission, distribution, and power equipment, railways, banking and finance, and if I have to pick the fifth one, then that would be auto.